YouTube and I'll be on Facebook. I'm not going to delete this. All the best always, brother. Jorge Antonio, ¿cómo estamos? Stay safe. You already know. We still need credit repair. You already know. You already know. Already know, Sandy. What's good? What's good? What's good? So, this is YouTube. Oh, YouTube. Hey, like and subscribe. Please like and share the video if you can. Alrighty. Let me export this out. My intro music first. Getting used to the live screen. Gizzy man, what's good, Brian? What's good, bro? A lot of questions. 10 people on YouTube. Come on now. Like the video. What's good, Eastwood? Chilling. Alrighty. All right, so let me become my partner. Alrighty. Call John. Let me get rid of this. Okay. Let me know if you hear John nice and clear, please.
Hello.
John.
Yes.
How you doing?
Good. How you doing?
Good. Over here, setting up. How's Florida?
Sunny.
Are any of the people you know going crazy over there for spring break, going to the beach?
No, I mean the people that come down here for spring break and go to the beach are coming from other areas, right? So they're flying in. But they even showed video from like late last week of the people on the beach, and I mean it's like compared to the way spring break would be last year before, or going back whenever, it was like so diluted. I mean, I don't know why there was such a big deal made out of it, in regards to the fact that there were people down here. I mean, this isn't. Look, it is what it is. I don't know. My own personal opinion is, I mean, obviously nobody wants this thing to spread, but
correct.
I mean, you're gonna. I mean, if people can't get outside and at least go to the beach, I mean, look, Florida, the entire coast is beaches, right? So, I mean, you don't have to be sitting next to somebody, 5 of them and shaking hands with them to still go out and at least enjoy the surroundings. So, obviously, spring break's a different conversation, but I mean, I just don't think it's nearly as bad as they made it last week. And actually, the governor of Florida just came out and said he's absolutely adamantly not doing a lockdown here, a shutdown here. He's not going to do it. He goes, I'm not going to do it. A shutdown, and then without any end in sight, because I'm not going to do that to the people of Florida. So,
wow! But like 5 kids just got coronavirus in Tampa that when they went to spring break.
Yeah, but I mean, you got to put it in comparison to everywhere else, right? I mean, Florida is one of the biggest states in our entire country, and I think there's like a very small amount of total cases of it outstanding, right? I mean, it's not a real concentrated area. The reason why New York is getting rocked so badly is because there's 9 million people that live on an island that's, the size of it's a small island, right?
Small island. I mean, you've been to New York City. Yeah, New York City, the 5 boroughs is small. It's 9 million people on top of each other. I hardly have. I live.
But that's why it spreads so quick, right? Even if you're not trying to get, I mean, even the houses, the apartments, the condos are right next to. You know what I mean? So it's like everything is on top of each other, and it spreads like wildfire. When you're you're a very high density area like that. I mean, I'm not a doctor, so don't misunderstand me. But I'm just saying, like, just from sheer logic, obviously you would think that area. Look at the areas of high concentration that are having problems: Chicago, New York. I mean, Seattle's another really big city that's running, and they've had problems at the beginning. So, I mean, we'll see how this whole thing plays out. But, I mean, I do like the idea that they're not shutting it down because, Larry Kudlow came out today, who's the president's economic advisor, and he said, I don't know if which was shocking that he said this because it didn't, you wouldn't expect to hear this, but he said, I don't know if us locking people in the house is the best plan right now. I don't know if that's helping or hurting us right now. as far as exacerbating the issue that's going on right now. Because honestly, they're talking about potentially isolating. The new thing that's coming out is they're trying to figure out a way to potentially isolate the people that are most exposed, right? The 65 and older, the pre-existing conditions, and they're trying to toy around with that in an effort to try and isolate where it can so that people can still function, I mean, we're effectively, as a society, a retail society, there is no retail society right now in our country. I mean, it's effectively donezo. I mean, until something changes. So I guess we'll see what happens. But right now, just some glimmer of enthusiasm would be nice. I mean, the media is certainly not doing us any favors on that side. But I mean, maybe there is no positive stuff to talk about as far as it's concerned yet.
Well, that is true. I mean, just to introduce ourselves, guys, my name is Gizzy. And I got my partner, John. We've been doing credit repair for 10 years, helping people out in all areas, all 50 states, including overseas. We currently take on credit repair customers on a daily basis, or people could purchase our $99 systems that we have to help so that they can help themselves out. We'd like to have these podcasts so that you can have an understanding of what's going on, not only with the credit market, but with real estate, financing, business. John is very knowledgeable in all those areas. Matter of fact, he can call himself an expert, and we want to bring this knowledge over to you so you can have an understanding, so that when you do decide to move forward, you have an understanding of how you're moving forward and not just doing it blindly. This is concerning your credit, of course. Anyways, Jay, I'm in Jersey. It's raining like crazy, cold.
Sounds about right. But just to go back for a second on what you said earlier, we also help people with tax issues and garnishment issues and school loan issues and settling debts if they need assistance with that. So, I mean, we run a full gamut. Obviously, the credit repair side of things, obviously, and the restoration is typically the first step in a much broader process, but we can obviously help people in all those areas. But, right now, I think more than ever, then part of the reason that we're trying to make these coronavirus related podcast so consistent is because right now more than ever there's a lot of things floating around as far as misinformation or confusion, and positioning people for the opportunities that could present themselves once this passes over, I think, is of utmost importance, because some of the opportunities beginning to present themselves are they could be generational opportunities that people could capitalize on, and you want to make sure that you have the ability to capitalize on that. And in a lot of cases, in order to be able to capitalize on that, you're going to need your credit, your finances in order. So that's what we can try and come in and assist, at least from an informational perspective, at the very least.
Well, the big thing now that everyone is, washy-washy on is, the question that is in the air. Will the credit bureaus close during this quarantine or coronavirus, COVID-19, 2 months, 3 months? What's going on with that?
Right. So I did get this question, like we talked about earlier today, a number of times over the last weekend. And so I assume must be some sort of a burning fire on the credit boards right now. But the reality of the situation is that these bureaus are run 90%. We've talked about these in previous podcasts about the bureaus and how they're run and how the situation's set up. 90% of these bureaus are run, for the exception of the fraud departments, which typically in almost all cases are handled manually. Almost the other 90% of the bureaus are run strictly algorithmically. So they don't need human intervention, and they outsource their customer service. So, most of the times they outsource their customer service to the Philippines or in some cases India, both areas that are not impacted right now by it. The coronavirus, and are unimpacted to the degree that, or they don't have the mandatory scenarios that our government is requiring right now. But I haven't heard of either one of them be bothered or impacted to that degree. So to answer the question, no, it's not. You're not going to stop. The algorithms aren't going to get shut down because there's so much socialist government intervention going on in our society right now that the credit is not something. And I actually, before we got on, just to be thorough, I went on the Consumer Financial Protection Bureau, and they specifically said that if you're unable to pay, try and call your creditors. Very standard vanilla scenario, right? Response. Nothing relating to there being any concessions or anything correlated to that. So, I mean, the intention should be it's business as usual. Unfortunately, there are all these different products, or not products for lack of a better word, all these different actions that are going to be coming out to help assist consumers and individuals get out of the situation. the student loan payments are being deferred for 60 days. You got to contact your provider. Mortgage payments are potentially being deferred for 3 months. I mean, there's going to be households are going to get checks. I mean, there's a lot of stuff that's going to go in. We're going to talk about the SBA disaster loans. All these things are going to be good, and they're going to present liquidity into the market. But, you know, obviously, if you miss payments and stuff, I mean, depending on if the creditor is willing to defer, it's going to be on them. The bureaus aren't going to stop reporting it.
The bureaus are not going to stop reporting. They're still going to be working.
Yeah, and there's no legislation right now pending either, is the point I'm trying to make. I mean, that has nothing to do with the stimulus bill that's going on right now. There's nothing. And quite honestly, the government is more concerned about trying to keep this entire party together, right? And trying to keep this economy rolling. They're not really that concerned. You know, obviously getting the necessary amount of liquidity into the system is what's a significant amount of importance right now, right?
Yes.
Worrying about individual credit scores is not something that they're most concerned about right now. They're just trying to keep this ship on the retreat, which I think they're having a lot of difficulty with right now, finding the right solution. So no, that unfortunately that's not something that's going to deviate. Could it down the line? I think, who knows? I mean, I'm hearing stuff right now that is just, you know, it's stuff you would never think. I mean, they're up around $2 trillion almost, I think, if you exclude what the Fed's injecting into the system right now. So, I mean, as far as, you know, stimulus that you're trying to pump back into the economy. And in all real talk, I mean, there's a real possibility that, I mean, 2 months is today for China, when China literally shut down their economy and they opened back up. It's 2 months to today. Now, they started opening back up about a week and a half ago. Businesses started opening back up. People started coming out and eating again, et cetera, right? So roughly, I mean, if you do that math, it's roughly 6.5, 7 weeks, right?
Yes.
We're about, I don't know, we're probably, 3 weeks into this? And you think about the fact that 6 or 7 weeks would put us somewhere towards the end of April, likely, right? Somewhere end of April, something like that. So, I mean, we're pumping. That's how, it goes back to other podcasts we talked about before. That's how levered we are as a society. I mean, granted, this is an extreme scenario where for maybe 3 or 4 weeks, we're literally shutting the economy down. But you're talking about Fortune 500 companies that do trillions and trillions of dollars worth of revenue, right?
Yeah.
You tell them you've got to shut down for a month. You wouldn't think that they need hundreds of billions of dollars in stimulus, right?
Yes.
You would say, all right, yeah, they can weather the storm, right? They'll be all right. I mean, this is how. I mean, it's kind of discouraging if you think about it, because how on earth, you know, post 2008, are we in a situation where, you know, 2 months? I mean, I understand the indecision of how long it's going to last is a large part of this, but I mean, you're talking about a lot of these industries are pleading right now for this stuff to get done. I don't know if they're looking for a handout, and that's what it's more about. But it's discouraging to believe that 1 month where you're not earning revenues as a billion, some of these cases close to $1 trillion organization, you got to ask the government for money. I mean, I'm not judging them. I'm sure it's difficult, and you're hiring, and you know, you have a lot of employees. It just seems very, very stretched to me, you know, that you can't survive after 1 month. And I'm not talking about the small business. The small business, I get it, right? I completely understand that. It's completely justifiable. But when you're talking about these big companies, I mean, man, I got to tell you, we have, you know, we get down here, we get a lot of hurricanes, and
you get a lot of what? You cut off.
We get a lot of hurricanes, and during the when there's a potential of hurricanes coming, you know, these airlines, they bend you over, they gouge you like crazy, right? Like crazy. Like a $200 ticket would be $1,200 one way, no exaggerating. It would be that much, and they're legally not allowed to do that, but they do it anyway. The point I'm trying to make is now the shoe's on the other foot, right? Now they're in the situation where nobody wants to fly with them, and they're the ones that are just screaming all day long about how many. And you know, you look at it and you say to yourself, "Man, that's crazy that it worked out that way, right?"
Yeah.
But the difference is, us as consumers, we don't have the government there to bail us out, right? And say, "Oh, listen, you need to get up. You want to get out of Florida? You want to get out of a hurricane? You don't have $1,200. All right, the government will give it to you, right?" Instead, you know, when you're here in Florida, a lot of the people that can't afford to fly out, right? They literally just hunker down because they don't have an alternative. And you know, there's a little bit of a catch there, but at the end of the day, it is discouraging, though.
I mean, but you've gotten out of Florida a couple of times with hurricanes.
Yeah, but I'm talking about an average consumer. You know what I'm talking about? Like somebody that you know, from an average scenario. Yeah, I've gotten out of there a lot. I mean, a number of times. But because in some cases it's coming right where I'm at in Florida. I mean, it's every time it seems like a hurricane's coming, it's like one of the bullet points. You know what I mean? Like like the destination is West Palm Beach. You know what I mean? So every time I feel like, even though it doesn't always hit it, but so when you got kids, you don't have a choice. But
that's true.
The whole point I'm trying to make is it just doesn't. It's not from an economic perspective. It just doesn't seem viable. But I do understand that they're a big part of our economy as a result. They need assistance. I just think it's ironic.
So not to make it political, but the Democrats, didn't like the stimulus package that the Republicans gave out, and they stopped it. What's gonna happen? Because I heard something about the airline companies that were buying back their stock and they don't want to sell their stock. Something about that, you have an idea?
No, you're confusing a couple of things. So first, they shot it down again today just to get the cloture, which means, if they would have come to an agreement today, they would have sent it to the House, Senate for an actual vote. Today wasn't even an actual full-on vote to approve it. It was just to give it to cloture, through cloture. And then it would have been voted on later today definitively. But, the Democrats are mad because it's, there's a certain amount of money they put, like, it was a big number, maybe $50 billion, something like that. It was a number to that extent that they set aside that would be for they called it national emergencies or something of that extent, or corporate national emergency, something to that extent, which effectively was saying that for things that they didn't anticipate, so they didn't have to come back and fight it again. Okay. Right? With the Democrats, they set it aside so they would have it there for an unexpected scenario that they're not already budgeting for. You understand what I mean? And the Democrats weren't okay with the idea that this was just some kind of an untitled and unlabeled source of funds. Yes. The problem is, I don't see how they're ever going to find a middle ground there. And then I read later on in the day that some of the Democrats used it as an opportunity to try and see if they could get student loan forgiveness added into this bill. This is going to be one of the largest socialist injections into the consumer environment that our government's ever going to see, ever. You're talking about right now. They're talking about it's in excess of close to $2 trillion, right? And it's growing because they can't come to an agreement. But not to digress, the couple Democratic senators were trying to propose to forgive $30,000 in student loan debt. I'm thinking in my head, listen, I think that the ability to do that, although we've talked about that already, and it's not going to happen, but you say to yourself, $30,000, right? $30,000 on an average school covers half a semester. So what exactly are you accomplishing, right? You know what I mean? All you're doing is helping the people that went to school back in the late 90s and early 2000s that are paying their debts, and they're going to pay off that remaining balance with that 30. You're not helping the future.
No.
You're not accomplishing anything removing $30,000 from a $250,000 school loan. That's nothing. But you know what it is? It's all politics right now, because then they'll be able to go back and be like, I got student loans removed. And the problem is not really accomplishing it, though, right? I mean, in essence, they're still just a straddle. The payment's going to be just as high. It's not going to get them anywhere that they need to be any quicker. So effectively, it's useless. And it's just a bully pulpit just to put on your resume. And unfortunately, it's not going to happen anyway. So even with all that being said, I mean, it leaves you where it's at right now, which is effectively at a stalemate. And every day the market gets completely trashed. So until they come up with this, I think we're going to be, it's going to continue to bounce around for a while. So
no socialism for the little people, but socialism for the big people.
Well, no, there's socialism for the little people. We talked about this. So effectively, what they're trying to do is, I talked about it today. It's $1,200 for each, as long as you filed taxes last tax year. So keep in mind, they pushed back the tax filing date this year from April to June. So as long as you filed your 2018s, because you'll be filing your 2019s this year, as long as you filed your 2018s, you get to apply for. Well, they're going to be sending it out effectively. I'm sure there's going to be some kind of an application process. It's $1,200 for each person.
Okay.
And $500 for each kid. So, if you have a family of 4, you're going to get a check for $3,000 from the government, right? So,
this is not communism, though. This is a stimulus. You're saying this is socialism, and this is effectively stimulus, but it's an extreme scenario. But the other argument that Democrats have is that they're giving a lot of money to corporations. They're not giving enough to the consumers, which, look, if you do the math and you say to yourself,
let's just say I think the average salary of a person in this country is like $55,000, right?
Yes.
And roughly, let's call it 55. It might be even a little lower than that. So let's say 55.
Okay.
After taxes and everything, you're talking $3,600 a month, right? Roughly, that you're bringing home, give or take, depending on how much you put into your retirement fund. You're getting a check for $1,200. If you got no money coming in, that's doing nothing for you, right? I mean, it's doing something for you. It's giving you some liquidity, right? But that's not getting you any closer to paying your bills, you know?
Yeah.
And if for some reason the restaurant you worked at closed because they were forced to close, that's not getting you a job tomorrow, right? That's just giving you a very short-term Band-Aid. What they're giving these corporations is, you're talking, I mean, the airlines are getting 50, 60 billion. I mean, you're talking about industry that's getting it. Now, obviously, there's economies of scale there. It's much larger, but I'm just saying that I do think that there could be more for the consumer in a situation where effectively the government's shutting down business. You're shutting down the gig economy entirely, meaning bars, restaurants, all those side jobs that aren't technically corporate America type jobs. And you're effectively shutting them down and forcing them in a lot of areas that they can't even work, to effectively putting them out of business. And then all the people that work there, you're putting them in the unemployment line and you're giving them a check for $1,200. Now, plus you can collect unemployment and all that stuff. But here's the kicker, and here's the problem. All of that sounds great. And then there was an interview today with Secretary Mnuchin where they were like, this is great that all this is a good start and everything. When are they going to get their money,
Correct.
Well, we should have, as long as we get the vote through today, we should have it all figured out by the end of the week. And he said, well, okay, that's great, but when are they getting the money? And he said, well, like I said, we should have it figured out by the end of the week and the early next week. And the check should be, we'll get, we can do direct deposit through the IRS, and they should have it in 2 to 3 weeks. Well, that puts you at the middle of April. Right? Maybe the third week of April, and this is the easiest part, right? Getting those checks out, because it's not a discerning situation.
Hey Jay, quick question.
You say to yourself, if you're a bartender and you lost your job last week, and you're in a city like, for instance, Philadelphia, right?
Yeah.
Where I'm from, and everything's closed. Well, what are you doing right now? How are you making money? You can't collect unemployment yet, because you have to be off a certain period of time to collect. Plus, unemployment basis is off a certain pay period. So if you were a waiter, your wage that you're getting paid is nominal relative to the tips. You're probably getting tipped in cash, right?
Correct.
So, I mean, there's a large conundrum there that's going to exist as this starts to, develop and starts to unfold, even after it gets approved, right? Even after the stimulus gets approved, which eventually will. And it'll be larger than what it was today. And there'll be more stuff involved in it, which will make it larger. And hopefully there'll be more for the consumer and all that stuff. But at the same time, there's still going to be gaping holes after the fact, even if this only goes to the end of April, right? Like, for instance, today they said that Italy, over the last 4 days, Italy's deaths, they said, have appeared to top, meaning every day there's less and less deaths, which means that the coronavirus may have topped in Italy, right?
Okay.
So if you do the math there and you go back and see where it really presented itself to where we're at now,
okay,
you're roughly still ballpark. Feel free to fact check this, but you're still in the same 6 to 8 week period that China was in.
Correct.
Right?
Yes.
Give or take when it peaks, right? Now I'm not saying it's gone, but when it peaks, so when you start to get to the other side of the hill. So, when you're saying that, I mean, we're pricing right now for doomsday in this country. I mean, we have effectively shut down the largest economy in the world for a month to 6 weeks to 8 weeks, and we're sitting in a situation right now where it could be over in the next 3 weeks, 3 to 4 weeks, and literally the market is budgeting for doomsday, the Congress is budgeting for doomsday, everybody, and nobody's referencing any of these other scenarios, right? Meaning like the other countries that experienced it, which is the only one that's even close to us.
No, everybody is selling doomsday.
But listen, there's certain industries that make a lot of money selling doomsday, right?
Oh, yeah, that's
But if you really step back, and I think I talked about this before, now granted, they use a lot more draconian methods, but you figure China has 1.4 billion people, so they have about 4.5 times, roughly 4 times the amount of people we have in this country, right? Roughly 3.5 to 4 times the amount of people we have in this country, And they got under control in that period of time when a lot of their cities are really packed in, right? Just like New York. So then you say to yourself, why are we not looking at this from a rational lens? Like, you back into it. I mean, I understand when the government, they have to plan this out of caution. The same thing happens down there with hurricanes and stuff.
Yeah.
It just seems like, when I heard the governor of Florida say, look, I'm not shutting it down with no end in sight. Because then, you know what I mean? Like you're effectively.
Is that because California is a Republican state and all the other states, California?
No, it wasn't California. I'm in Florida.
I'm in Florida. I'm sorry. Is it because
Florida's not a Republican? It always flip flops. It's not always Republican. It's not always right wing. Florida is a transient state, right? There's constantly people moving down here. Literally year over year, and in the last 2 years, because of the tax bill, it's been an influx of people. So it's not like a typical state where it's always left wing, right wing, etc. It's a constant turnover, right? That's why it's such an important state. If you ever listen to presidents talk about trying to win Florida, Florida's an enormous state with a lot of people that are here. But if you can win it, right? If you can win it, you get a lot of delegates. Plus the fact that it's always up for sale, meaning the Democrats might exceed in some instances, the Republicans might in others. If you remember, going back not too far, when Bush and Gore tied, remember where they tied in Florida, and that was like 3 weeks worth of back and forth. It went in front of the Supreme Court. I think it was crazy. Yes, because it's always up. But that's not what, to answer your question. That's not why. He said it because I think he's coming from a rational place. I don't know how to do that. If you don't have a backup plan, like for instance, if you're, I understand there's certain emergency scenarios required, but if you don't have a backup plan and you say to every business that's around there, listen, you got to shut down. You got to shut down. That's it. And we'll let you know, TBD. Well, if you're a business owner, that's why you're thinking doomsday. But if you said to every, let's just say, DeSantis, who's the governor here, says, listen, we're going to shut us down for 2 weeks. We're going to get back up running the next 2 weeks. We have this, and you have a plan? Well, then people are going to feel a lot better about it, right? They're going to literally treat it like a vacation for the next 2 weeks. And they're going to come back to work in 2 weeks, and we're not going to, people are going to be hiding in their closets and hazmat suits, right? So, I mean, I just think somebody on one of the news shows today said, as a society, we're not having problems with the coronavirus. We're having problems with the response to the coronavirus, right? Yes. Meaning, like, how it's being handled from a governmental perspective, how the media is handling it, how every aspect of this has just been torpedoed, right? To the point where if you're somebody that just doesn't understand different aspects of finance or just in general, it can be daunting. Like, just turning on the news. Right? I mean, people go like it can be so intimidating for people that just don't understand what's going on. That just the sheer thought of hearing every single day another person passing or another country coming across it. Scary. It can be consuming for people, and unfortunately, there's absolutely, if you go on any media and any television, there's not one channel. I mean, it's like the full court press. There's not one channel that's trying to breathe any life into the situation. Correct. I mean, none. And it's probably the opposite, especially the major networks. It's just trying to drill it in you. So I think, again, trying to do these podcasts to provide some clarity on the financial aspects of it, I think is huge, because I think that it can at least give people some clarity on that side of things, right?
So I'm sure the government is going to tell the bureaus to forgive people's late payments.
I don't think that's going to happen. I think there's a very small possibility that happens, because I think at the end of the day, the government's going to turn around and say, well, listen, we're going to leave it up to the creditor themselves. You understand what I mean? And then it's going to be left on, let's say your mortgages with Chase Bank. If you went with Chase over that period of time, it'll be Chase's determination if they want to file, report you as late, or if they don't. I've seen it before with major natural disasters, right, in certain areas. Yes. Areas that get flooded out, hurricane, terrible things happen, right? Yes. The creditors will typically be the ones, the onus will be on them for the reporting side of things. The government comes in and provides safety, support, backstop, etc. They're not going to get involved in the minutia. And as much as it's not to everybody in this world, credit in the grand scheme of things, from a personal perspective, not a business perspective, would probably get booked as minutia, right? So I guarantee it's gonna end up being the creditors that got to make it. And chances are, quite honestly, I bet they will. Some of them. Now, it's not saying all of them, right? But I bet you a lot of them will make that concession. It's just not going to be at the bureau level, I don't think.
Well, people are asking about student loans. People are asking if on mortgage payments, but this is not in Florida. This is just like whoever has the emergency in that state, correct?
Wait, what do you mean?
Like when they said you don't have to pay your mortgage for 90 days, you don't have to pay.
No, that's everywhere. That's the entire country. So you got to contact your mortgage lender, whoever your primary. It can't be an investment mortgage, by the way.
It can't be an investment. So all these people were Airbnbs, Jay.
That's an investment. Can't be an investment. It has to be a primary mortgage. They're not going to give you. They're not going to reward your investment, right? But if it's your primary mortgage, meaning you live in there yourself, that's your house, your primary residence, and you contact your mortgage company and you tell them, listen, I heard or read the other day that they're deferring. You guys are deferring mortgage payments for 90 days. They will. Each mortgage company is a little different in what they want from you to submit for. But it was introduced last Wednesday, and it is absolutely a possibility on your primary mortgage. Again, I want to repeat: not investment properties. Airbnb obviously would be booked as an investment property, so that's not going to suffice, and they're not going to probably allow that. So chances are that's going to be handled a different way. So that wouldn't apply.
So the investors who took out a lot of hard money for investment properties, and they don't get people to move in.
Well, hold on. When you take out, and first of all, 9 times out of 10, a private money loan is not even. I mean, that's an individual's fund, right?
Correct.
Like in a lot of cases, we talked about this in the previous podcast. That's not a chartered bank. They don't even have to do whatever they want. It's their money. And chances are, when you don't pay them, they're harmed significantly more than a chartered bank because the assets are significantly different. I mean, Chase has, $3 trillion in assets?
Yes.
A private money lender might have 10 million. When you don't pay, if you have $1 million loan out with them, that's 1/10 of their entire fund, right? So, I mean, you're talking about a significant difference. And it does become a trickle-down effect, right? And we talked about it again. Go back to some of these original podcasts. I told you guys to anticipate a lot of this stuff 3 weeks ago when we did the first one on coronavirus. And I said, just be prepared. You're going to start seeing the banks contract. And as a result, you're going to start to see things tighten up a little bit. And it's going to continue down that path.
Yes.
It's just how it is. It's a natural response when you see the market pull back. It's a natural response for banks to start to pull back because the economy is naturally contracting and they're going to naturally contract. But no, the private money lenders are a different problem. And quite honestly, I think with where the market was at, the real estate market was at, right before the tanking and how, it was starting to get to a level of exuberance in some areas, bidding up prices and stuff. I would think that there's a lot of private money lenders that are in a really bad position right now. And they're probably going to have to do workouts with their clients. You know what I mean? They're not going to be left with any alternative. Otherwise, it's going to tank their fund. Because chances are, they value these properties at a certain value. Yeah. And they base it off an ARV that was there. Let's say the person got the loan a month ago when this all started. Well, that value's not there anymore. Even as is value is not there anymore. You understand what I mean? So if they took the property back, they'd be taking probably a haircut on that, depending on how far along the project is. Then you have to arrive at the conclusion of who's the buyer right now, right? I mean, you have people hiding it under their beds right now. The money flow has effectively slowed down exponentially and likely will for the next 5 or 6 weeks. Doesn't mean business stops in the next 5 or 6 weeks, right?
Correct.
You borrow from a private money lender, that guy's got investors to pay. And those investors don't want to hear that. So, that'll be an interesting unwinding. And who else is another one I think that's going to be interesting to watch unwind is the people that do the business cash advances.
Yes.
The ones where they advance you and then they hit you off with a daily. And
John, those were the ones that are going to hit the fan because every day they're taking money. How about you not taking money for 6 weeks?
No, but that's what I'm saying. I'm saying that no, they're in the same boat though as the private money lenders. I'm telling you, it's the same idea. It's just the private money lenders have collateral, right? So if they got in at the right price, they have a little more leverage if their market held up. But on the cash advance guys, imagine this, because there's a client of mine where, she was a client of mine for something else. And I was helping her with this, and she had a cash advance. And she ran, with a company. She ran into a problem, and I was dealing with the attorney trying to work it out. And she said, "Look, I'll give you, $500 a week for the next 8 weeks to get you paid back." And they finally came to the agreement, and then everything happened over the last 3 or 4 weeks. And she came back and was like, "Look, I might need to make adjustments here because, this isn't working for me." And he was like, he was like, "Well, I'm not adjusting that number." Right. He's like, "That is what it is. And if you don't, I'll just take you to court." She said, "Look, take me to court." Right. Because at this point, everybody is giving concessions on lending products. Right. Yeah. What do you think the guy coming to court defending a cash advance product, right, that's hitting you on a daily ACH, which is charging in excess of 35, probably 40%.
Correct.
What kind of sympathy do you think that guy's going to have at court? I mean, in this kind of an environment, right? I mean, it's almost startling to think that anybody would take a power position in that kind of a situation and not be accommodating, just because you would think that they're the ones that are going to get their heads chopped off, right? Like in this environment, they're going to be the ones that are going to be the first ones not to get paid, because they're so expensive. You understand what I mean?
Yes.
Like they're unsustainable in a good market. Imagine what they are in a bad market.
Oof.
That's what I'm saying. So you can imagine this guy's going to be sitting in court for all the loans he has over the course of the next 6 weeks. Because for businesses that are shut down, how's he getting paid? He's not getting paid.
He's not.
He's not getting paid. People are going to turn off you know what they do? They're going to block the individual from being able to get into the account. And that guy's going to be there sitting there with 50 bad loans. He's like, "Man, what I do?" Because you got no collateral. You got no collateral but a UCC filing. And what good is that UCC filing if that business doesn't have assets? Nothing. It is useless.
The UCC filing, just a public record that you lend money out to someone, correct?
A UCC filing is basically a bookmark for them that they lent you a certain amount of money, so it shows on against your business credit report, but it also gives them access. It's like a collateral to it collateralizes any asset you have on the company, right? But if you don't have any assets, it's worthless. It doesn't. It's the same process. So, for instance, let's just say you were a landscaping company and you got an advance, and in the name of the company, you had submitted that you have all these dump trucks and all these other things that you have that have equity in them, right? Well, let's say you stop paying them, he can go and he can try and claim them to pay that back his debt. If you got nothing, they get nothing. Wow. Now, granted, I mean, look, they can take you to court, and you can get a judge that is completely, devoid of everything that's going on. And I mean, anything could happen in court. But I'm just speaking from a probability perspective, right? I mean, you're sitting in an environment where the federal government is pleading with mortgage lenders, all these lenders not to student loan, all these people not to pay. And what, you're going to not pay all them, but then you're going to turn around and pay the guy that's charging you 40% interest and hitting your account for $350 a day? It's like, come on, this is a gift for the people that are having to pay that.
Yeah, that's true.
This is a gift. And the guy on the other end who's been lending it at 40% and hitting them for $350 a day, I mean, if that guy hasn't come to the realization that this is going to be a real problem period for him yet, then they're not ever going to learn. If you're not willing to work out with clients now, you're not going to, I don't know how you get through it. That's what I'm saying. Like, I don't know. I mean, look, if you're well capitalized, obviously, I just don't know how you work out these loans. Because most of the time, if you've ever seen anybody that has, that's borrowed from some of these institutions, the relationships are typically very bad. You know what I mean? Because the people are so angry that every day this person's hitting them off. They know they got a raw deal on it. They're normally pissed, right? So it's not like this happy relationship already. So when something like this comes into the equation, it really shakes up the leverage. You know what I mean?
It's like a crackhead asking for crack to the dealer.
Look, it is the lowest hanging fruit in the financial world that I've ever seen ever, and it's available to everybody. And as a result, you get taxed accordingly. And
I got a question here from Mary Ann. If they do the deferment, the student loans, right? If they do the deferment, can they report to the bureaus as late payment?
No, not if they're deferring it for you. Deferment means that they're basically prolonging it, right? So no, they wouldn't report it as late.
Then we
They wouldn't report as late if it's effectively deferment, and they're not. And the same goes for the mortgage payment, by the way. They're effectively deferring them as well. So, I mean, if you set it up with your mortgage lender, effectively what they're doing is they're not going to report you late for those months if you get it set up. Now, that's not me telling you to stop paying and not communicate it to your lender, because you need to communicate to the lender and have them know that you're getting within that program. It's not just a program they automatically institute, right? They don't just naturally say, hey, listen, everybody, you got to stop, you can stop paying and we'll do all the legwork on the backside. You still have to submit for it. They still have to, there's protocols in place. So you still need to, same with the student loan side of things. You still got to contact them. You still got to get it implemented. It's a matter of a phone call, but it's a phone call that in some cases, if your mortgage payment is $3,000, it can save you $10,000, right? $10,000 you keep in your pocket for those 3 months. And I don't know how they reconcile it after that. I'm sure they can explain that to you. I'm sure it's specific to each bank though.
Well, a lot of people also talking about student loan interest forgiven.
Yeah, it's going to be 0% for those 3 months. It's actually 60 days right now, but you're not paying any interest for those 2 months. So effectively, they're deferring it, right? So that means you're not making a payment,
correct?
And there's no interest on that. So what's happening is when you would defer your student loan, like everybody that comes out of college, they defer. Most of the people, they defer their student loans, right? Well, what happens during a deferment is it pays as agreed, but the interest goes on top of the principal, right?
Even if you're not paying it.
Correct. Even if you're under one of their programs, the interest still adds on. They still get paid.
People don't know that.
They know that when they come out of it.
Yeah.
They say, how did my balance go from 50 to 65 after 2 years? And they figure it out quickly. But that's the idea. So in essence, they're saying over the next 2 months, you don't have to make payments. So we're not going to hit you off with interest, right? We're going to defer your payments, and we're not going to add any interest onto that either. So that means your principal balance isn't going to grow either for the next 2 months.
Okay. But those 2 months will fly by. Hopefully, in 2 months,
they're going to fly by. But I think the idea, and I don't think it's a crazy idea, is I think before the stimulus plan is done, I think there's going to be more with the student loan scenario, because I don't think so far, and I don't think the Democrats are entirely wrong. I just don't think there's enough right now that's being provided to the consumer. Because I just think there's a lot of effect that's going to come to them, which it already has, and I don't think that's enough. That $1,200 is enough. I just don't, because I think that $1,200 might cover one person's rent.
Yes,
you know what I mean. That doesn't cover their living expenses. That doesn't cover their existing bills. It's not enough. So, and I think it's great.
Jay, with all this money being given, don't you think? Because I've read something that like even ShopRite. Some grocery stores, they're giving their employees another $2. But with all this stimulus, isn't inflation going to go up and take that money?
Well, no, it's going to run the deficit up, right? It's not, you're talking about a situation where it's going to, but with all this money, it really depends on how they reconcile the deficit. That's going to, you're talking about $1 trillion that they somehow have to figure out how to reconcile against the existing deficit, right? So, I mean, they don't even know how it's being paid for. A famous quote from Mnuchin was, we'll figure out the deficit later. Oof. We need to do this right now. Well, the problem is you're pumping out $2 trillion. It's 10%. It's 10% of our entire,
our entire debt, which is like 20.
It's 10% of our entire economy. So you're basically pumping that out in a stimulus plan that you're not reconciling, which is fine. I agree. I think at this point, I think it was the right decision, right? Because what are you going to do? Sit here and argue with the other side? It's hard enough for these two sides to come together to figure out, what kind of drink they want, right? Let alone all these specifics. I'm just saying that depending on how they reconcile it and depending on what kind of money, because it's all going to be relative to what kind of money they bring in relative to this that they're giving out, right? See, you got to understand something. When a large reason why they're giving a majority of the money to the corporations is because they know they're going to get paid back. Correct. Right? You're lending to Fortune 500 companies. The airlines have been in business for 100 years. A lot of these other industries are huge businesses, so they're getting loans with the idea they're going to get paid back, right?
Yes.
It's still a stimulus, but you're basically backstopping them so that they can effectively pay you back. Now, the consumer's getting a certain amount because that's money that's lost. And if you figure there's 350 some odd million people in this country, $1,200 a head is a significant amount of money, right? I mean, yes. Do the math. So It's still a lot of money, but in the grand scheme of $2 trillion, it's a small percentage. And it's because it's effectively, there's no way to reconcile it to pay it back because it's not getting paid back.
Well, some
So,
people over here on are taking advantage. Like there's videos of real estate investors talking about the SBA and how they're giving out loans. So I got a question here. Is it the best time now for raise your credit score limits, and for business, should you get an SBA loan?
right. So two things. Number one, I think he meant raise the credit limits. Is that what he
Yes.
said? Or
Yeah,
did he say
raise the
something
credit limits on your personal credit.
Only if your usage is down. Otherwise, you're going to waste it right now. If your usage isn't in line, like 30% or lower cumulatively, and on that card,
So that's the formula?
What's that?
Is that the formula? If you're going to go and ask for
that's the formula right now, because you're dealing in an economy that's contracting, and they're already picking and choosing who they want to lend to right now. So they want to lend to people that don't look like they need it. And the way to not look like you need it is to have your ratio low on your open unsecured credit ratio. So if you're cumulatively at 30% or lower, and you're on that card 30% or lower, yeah, I would absolutely get increases. No doubt, no question about it. Because why not? You should have probably already done it before.
But you got to have a clean credit file, because they will run your credit again.
Oh well, yeah, no. That was understood. I'm sorry. Yeah, you would absolutely yes. If you're somebody that has negatives on your report, you're gonna have a very difficult time. When I was speaking more from the perspective of somebody that was having I should have prefaced that, somebody that has a clean file and everything else is in line. Everything else, all the other boxes are checked, and this is the last piece. So, if you do have negatives, it's going to be very difficult. I mean, look, to give you an example, even people that have Capital One cards, because I know a lot of the people that follow us and listen to us have, they're starting out with Capital One cards or something. Just to give you a point of comparison, Capital One at the end of December was $115 stock. It got as low as $35 on Friday.
Whoa.
I mean, it literally shed 75% roughly of its value. Now, what do you think that does to them as a lending entity? When you lose 70% of the value of your stock, which is effectively your pulse, you're going to be a little hesitant to start lending out, right? You're going to start to contract, and you're going to start to lend a little more hesitant because, again, that is a representation of your overall financial health, right? The stock market tells a story. So my guess is it's selling off so aggressively because people are concerned that the borrowers, when you're dealing in a subprime area, aren't going to pay. And it's a viable argument, but the fact of the matter is I don't think it's 70% markdown, and this is what I was saying about there being good opportunities of presenting themselves. I think in the worst day, they're not a $30 stock. So, I mean, I think either way you look at it, that was just a small example to demonstrate the fact that you're going to need to have your file like looking good to go get credit right now. I mean, I think Gizzy, I think I told you this before. A close associate of mine is a senior VP lender, and he's on the committee over there at Celtic Bank to make decisions.
Yes. The Utah guy, I think you told me.
Well, he's not. They're the Celtics headquartered in Utah. He's actually in Connecticut, but
okay.
I talked to him last week about the SBA loans, and I said, "Listen,
pay attention, guys. John got friends at high places, so he knows."
So, I was talking to him on last week, and I said, "Listen, what's the deal with the SBA?" He said, "Look, they're not even putting it through them." So effectively, every other year. Now, by the way, let me preface: Celtic Bank's the third biggest SBA lender in the country, commiserate to volume, meaning the total amount of SBA loans they closed. Okay, just to give you a background.
Okay.
Now, he said, every year going back, the SBA is effectively just where the money supply comes from. Okay, they always lend through. It's like the FHA. They lend through banks. So the bank does all the underwriting. The bank does the servicing. They do everything. Evidently, with the new $50 billion that Trump introduced about 2.5 weeks ago, roughly now, that's being done directly through the SBA. There are no banking entities involved. So they're not pumping it through random banks. They're not pumping it through other banks. You have to deal directly with the SBA on these, which, again, he and I were both talking. I don't know how you prepare for that. I don't know how you don't use a banking entity as, doing what they've done for you for the last 50 or 60 years since you've been around. But how are you going to now handle the volume of that without having that a week ago? You understand what I mean? How on earth are you doing that? And I think that's going to pose a large problem. I just got off with a client before this who asked, they said, listen, we want to submit for the SBA disaster loan. And I said, listen, I think that's great. But if I was you, because they sent these out so early, one of the stipulations in it is how, effectively, what's your hardship, right? How
Yes,
does it
you gotta
apply?
have a hardship. No, personal and business.
Say that again?
You gotta have a hardship if it's personal or business.
Well, no, in this case with the SBA, it's got to be business, right? Because that's all they're lending to on the commercial side. So they want to know the hardship. I don't know how you can tell them. You're basically going to have to speculate your hardship because it's only been 3 weeks, right? We could wake up tomorrow, the second week of April, and things could change, right?
Yes.
I mean, I'm not saying they're going to, but then you're effectively impacted 1 month, right? Now, maybe you give yourself a month to regroup or something. I don't know. But I was saying to them, I said, listen, look, I fully encourage you to do it because I think you should. If you are impacted and it's going to affect you, absolutely do it. But if you do it, you better make sure that you do it right, meaning get all your financials together. You give them as much information and make it as detailed as possible so that you're not the guy that just gets pushed to the side, because that's what effectively is going to happen. This is going to be a feeding frenzy of people trying to submit for this.
Oh yeah.
And most people are just going to fill it out. My name's John Jones. Blah 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 blah. Right? They're gonna have a clue because the people at the bank normally fill them out for them, right? And they did normally do all the labor. Now the individual's having to do it themselves. You know what happens in those instances? Those instances, the people get pushed to the side, and then they get circled back around to. And they're the ones that are going to keep calling, like, "Where's my app? Where's my app? Where's my app?" And in essence, their app's going to get pushed to the side because they're going to handle the ones that came in properly first, right?
Yes.
Whenever that time comes. Now, if you can go back to what I said earlier about how it's going to take 3 weeks for them to just cut $1,200 checks, how long do you think it's going to take them to start cutting those loans out for the SBA when A, they're not using a bank that already has an established infrastructure to handle these kinds of volume and the underwriting of it, but B, the fact that it's taking them 3 weeks just to pump out checks that they literally already have in their possession. How long do you think it's going to take for these SBA loans to close?
3 weeks, a month?
Way more than if it's 3 weeks for them just to. He said today's 3 weeks for them just to cut checks.
Oh wow!
That's without even underwriting a loan. Talking about a situation, you're talking exponentially longer, and all the while, they're pleading with a business owner. It's like, listen, don't fire anybody, because if we give you these loans, if you're a small business, 500 people and smaller, and we give you this loan, if you retain all your employees and don't fire everyone, we'll make it a grant, which is a great program, right? That's awesome.
Correct.
The problem is when are they going to get it? And that, I think, is where the problem is going to come into play, because I think there's going to be such an overwhelming request for these SBA disaster loans, understandably so, because they're A, making it sound like it's so simple, and B, they're not explaining to people that they're not going through any particular lenders. So they have to be setting up for that right now, right?
Yes.
They have to be one of the only places in this country hiring right now to bring people in to help underwrite these and get all the paperwork together and go through all the regular protocols that the SBA does. Because the one thing about the SBA, because I've obviously helped facilitate these and been a part of these for many years. Very, very detailed loans. Very detailed.
Well, someone's asking right now if can we get some SBA money with startup?
No. I mean, in I don't know any startup programs in a normal economy, but this particular product is only for people that are affected by this virus. And, again, that's what I said, when you come on TV the way they have, and you tell everybody that you can make all this money available and it's going to be for businesses and personal, et cetera, et cetera, et cetera. I think that the wait is it's the United States government. So, I mean, things don't happen in the blink of an eye as much as they'd like it to. I think it's going to take a lot longer than people anticipate. And I think it's going to be, I hope it's not, but I just think it's going to take longer than people think. And I think as a result, I hope it doesn't, but as a result, I think it's going to put more pressure on the economy, because I think that people are going to be thinking that it's going to be quick, and it's just not. And until things get back up and humming, I mean, what do you expect a business owner to do when they took you know what I mean? Like, what do you expect them to do? They got to lay off. I mean, They don't have a choice, and it just puts them in a really difficult position. I think the thing that would have been the right, and look, in hindsight, it's always 2020, but I mean, if you look at it, say to yourself, if the government would have shut all the borders, shut all this stuff, that went to all these extraordinary lengths, I just think it would have made a little more sense to wait a day or two, because the market was already torpedoing anyway, right? Yes. And just try and figure out, we're going to shut these businesses down for 2 weeks, then we're going to start doing this and this, and just a little more of an organized plan. Because quite honestly, it just seems like we're shooting from our hip right now, and nothing's working. And now you're shutting down cities, you're shutting down states, and all these small businesses are effectively being governmentally shut down. But there's no like, all right, listen, guys, we're going to shut all your businesses down, but we're going to give you a check for $20,000 while it shuts down. That's not what's happening, right? It's shut down your business, and then you can apply to try and get a loan later. And it's like, I don't know if that was the right way to do it, because we're still experiencing a very, very, very significant infection with this virus, right? So it didn't in any way stifle it, So
well, it's not that significant if Florida didn't, think it's significant.
But it's only because of the density, though. It's a density.
Okay,
thing, The closer you keep people together, the closer people are together, the more people you have in a close, concentrated space, the higher potential there is it's going to spread, right?
Yes.
Florida, for the exception of, a large part of the center of the entire state of Florida is ignored, right? It's just Central Florida. The three most populated places are the Southeast, the Southwest, and then the Panhandle. Granted, Jacksonville, I think, has a population of like 300,000 people, but all the other areas that's it, right? And then it's very, very rural in the middle parts of Florida. It's just very spread out. So people aren't on top of each other like that. It's just, so it would explain why it's not spreading the same way you're seeing in New York and the surrounding areas, right? And you're seeing in Seattle, and you're evidently seeing in Chicago, and a lot of these areas where there's just a close concentration of people that can help facilitate it. I just think that what's going to happen is I think that this thing's going to work, basically work its way through the same way it did in the other areas. Because, it didn't happen once. Looks like it's having, it looks like it's becoming a pattern. And if that's the case, I just don't, I know you have to try, especially you have to try to find a solution. And sometimes trial and error is the only way to do it in situations when you shoot from the hip. It's just, I don't know if forcing people out of business was the way to do it. I just don't know if that was. It's just like Larry Kudlow, like I was saying earlier. He said, he had said, I don't know if shutting, keeping everybody quarantined is actually helping or hurting, and they just don't know, and it's unfortunate.
Well, that's because there's a lot of confusion right now, and they, looking at the media and everything has us confused.
But this was a guy that was in the he's the national, economic advisor for the president. This wasn't some random show. This is a national economic advisor for the president on television today. So,
that guy said that?
Yeah, Kudlow. That's what he said. Part of his interview, he said, "I don't know if we're actually helping or hurting by quarantining all these people." Okay. And it's a valid statement, though. We would have arrived at it anyway. Because, you're effectively shutting down all these bars and restaurants. And the restaurant, for anybody that doesn't know, the restaurant business is one of the riskiest businesses to be affiliated with, because the margins are so tight. They're so tight. You might make 10. If you make 10 to 15% in the restaurant business, you're doing well, right? So if you tell them you're effectively shutting them down for 3 days, you're putting them out of business, right? Yes. Let alone a week, 2 weeks, 3 weeks. You might as well mail that in, And these are nice restaurants, not trash restaurants. These are nice restaurants that work off of those kinds of margins. It's just difficult, man. It's tough when you think about the position some of them were put in, and then now they got to go try and dig their way out through no fault of their own, because it's a tough enough business to try and operate without having a virus in the system. You know what I mean?
Well, the people are saying here on the feed, I think the only thing that's spreading is fear. The news feeds hysteria.
Absolutely.
People are getting scared.
Absolutely. And if you think about it, think about this for a second. When people get in this kind of a routine, right? Like when you get in like a fight or flight scenario, right? Your rational part of your brain is completely vacates, right? Okay. You're dealing strictly from just an irrational, it's a fight or flight mentality, right? You're either going to stay there and fight, or you're going to run, or you're just going to be coddled up in a ball, right?
Yes.
And you could look around in any given day and you could see an example of each one of them. Like I was in Home Depot yesterday picking up some stuff, and it was, that's one business that's still making money. But you go in there and you see some people are, they're walking around with the masks on. There was some guy had like an industrial mask on. It looked like Darth Vader. Some of this stuff is just completely outlandish in my opinion, right? But then you see some people you could tell just were easy breezy, right? You can just look around and see in the people's eyes. You know what I mean? Like the people that are
John over here in Jersey, bro. We driving around with masks on. We are.
I'm not laughing at that. Listen, I'm not laughing at that. I'm just saying.
If you go, you know, Bergen County, Teaneck is like the worst hit in New Jersey. Teaneck, all those people.
It's right next to the city, though, and all the people from the city, that's where they live. So I mean, the ones that were there for the last 2 weeks before it got shut down. Look, I completely get the idea behind trying to isolate New York City. Like, I get it. There's too many people there. It's too easy to spread. As human beings, at least in the United States, we're naturally not as clean as we probably should be, so it's understandable, right? I just don't think it needs to be a sweeping scenario across the world because it's not every area is that condensed. That's the rub behind New York City, right? Your apartment, if you're in Manhattan, is the size of a closet somewhere else, right?
Oh, and again, very small. And you're paying a lot of money for it.
That's what I'm saying. Then there's a closet right next to it, right? That they call an apartment or a condo. So the point is, I mean, you're just packing sardines in. So it's completely understandable to spread like wildfire. But I don't understand why it wasn't expected to do anything in advance, right? Why are we playing from behind? Why are we playing from behind as a society? We knew about this in January. This whole thing broke out in China the first week of January. Then it went to South Korea. Which, by the way, we have a lot of Chinese nationals in this country. I don't think I'm enlightening anybody to that topic. So, I mean, I just don't know why everything is being played behind. You know, and this is why you're getting a lot of pushback everywhere from people. Like, this just wasn't – it just seems like there could have been some preemptive measures that were taken into consideration after we confirmed it was here. And I just think that may be – look, again, I know hindsight's 20/20, and I'm not the one making the decision. So,
correct.
I just think that I don't know why we waited – to do anything preventative, right? I just don't. It's crazy though.
But I'm pretty sure they have to tell the markets and everything about it, and that's the markets shut down too. I mean, if you're gonna tell an airline,
you talking about the stock market?
No, I'm talking about like not the market, the stock market. I'm talking about like the industries, like the airlines, the tourists. You know, people who, the boats, the carnival boats.
The cruises. But that was originally the idea where it all started getting into this country from. That's why they were like quarantining people in boats out off the coast of this country and leaving them there for like 2 weeks until they tested them. I mean, this is what I'm saying though. Like the airlines knew when there was the coronavirus was deep in China and it was bad, because it was bad for a while. Well, I say a while. It was bad for like a month. They stopped flying into there. So they knew the significance of this. That's what I'm saying. Like, I don't understand. I don't understand a lot of it, but it's not that's not my job. So, I just, this didn't just drop on everybody's lap. I mean, it woke up one day and boom, it was here. Maybe that happened to China. It sounds like that happened to China. That didn't happen to us. We saw it playing out on all these other countries. And then, we just woke up one day and we were surprised that it landed itself here. I mean, our borders are wide open. A lot of Chinese nationals in this country, not to mention Italian nationals, not to mention South Korean nationals, which went to South Korea next. I don't know how it became such a surprise.
Well, the way that our whole system is designed, we're globalist right now. With everything, with industries, everything. I mean, we are getting put in a position in which China has all our medical equipment or medical supplies, and it's hard for it to come over here. They were arguing about sending masks over here, and we weren't even getting them.
No, they're not gonna. I mean, why would they help us though? I mean, or why would they move quick? Why would they snap their finger? I mean, they just got. Look, you saw what happened with the trade. The trade agreement. I mean, it's not surprising to me that they would take their time. They just experienced it. We basically had blamed this entire thing on them, right, wrong, or indifferent, which is probably, I don't know what it is, but I think that it's weird to me that, again, all this stuff is it just sits with me that this didn't kick into our country, so just keep in mind, this didn't really start to affect us till the beginning of, like, the first week of March, right?
Yes.
Right?
Yes.
Okay, so this went to China at the beginning of January. That was a 2-month warning shot. Like, I don't understand. I don't get it. Like, everybody else in the market was preparing for it, in the stock market. You know what I mean? Like, but there was no preparation anywhere else? I mean, the market started to sell off in February. Now, it didn't start to plummet until we got into the very end of February, beginning of March, but it started to sell off. You could see things were starting to change. I just don't understand how. That's what I heard. I just don't understand how it was just such a shock, to the point where like we're tap dancing right now, trying to figure out what's the best move. You know what I mean?
Yeah.
Crazy. I think the one thing we like, without getting into too much political stuff, I think governmental stuff. I think that.
Well, a lot of the government got a lot to do with this, so I mean, we have to get into it.
No, but I mean, from a perspective of the lending side of things, I think is what is the most important for the consumer, right? Because I think that there are going to be, and I know I've said this going back to 3 or 4 podcasts, there's going to be a lot of opportunities on the other side of this, and I think it's absolutely imperative. And this isn't an opinion I'm giving. I mean, there's already significant opportunities in stocks right now. For stocks, I gave an example on Capital One. I think it bottomed. I think it was high 30s, like I said, and then it rallied back up. I think it's back in the 50s now. So that was just 24 hours. We're talking about almost doubled, right? And you're sitting in a situation where there's going to be so many, and I don't think any just random person should be buying stocks. I don't think that should happen. So I'm not suggesting that. I think you should have if you're not a pro at it, you should have somebody that is a pro assist doing that. But I'm talking more to the real estate side of things. I think if you let this situation unfold, as I've said in the last, there's going to be a lot of really good real estate opportunities for the reasons I talked about before. By the way, going back to the early part of this cast, because there's going to be private money lenders that want to liquidate because they took a property back and they need to recoup capital. There's going to be a lot of opportunities, any number of them. I watched it happen in 08, 09, 10, and banks are a lot quicker to dispose nowadays of bad assets. It's not like it was back in the day. So, I mean, things have accelerated exponentially, in that capacity, both from a lot of private money lenders get deeds in lieu of foreclosure, meaning they effectively don't even have to take you to court. They just file the document if you don't pay them and they take the property back.
Oh, wow.
So, yeah. So, I mean, there's a lot of things like that can help accelerate it, and the lender just wants to turn around and sell it. So, I mean, there's just a lot of those kinds of situations, not to mention, like we talked about before, people that have been trying to sell forever or people that need to get out that are going to be dropping prices like crazy. And then there's just going to be a natural, over the course of time, just correction that needs to occur. A healthy – see, what we're seeing right now is not healthy, right? This is not healthy. I mean –
no, this is a heart attack to the market.
This is to lose 40% in your stock market in the course of a month, is that is not healthy.
This is an aneurysm. Right?
This is extreme, right?
Yes.
But, the real estate pullback is going to be a little more controlled, and it's going to be a little healthier because, again, I've talked about this before. The stock market moves like a motorcycle. The real estate market, moves like an aircraft carrier. It moves significantly slower. But when it gets moving in a direction, it moves in that direction. When it points itself in a certain direction, it normally takes a little while for it to get there. Same with building up neighborhoods and gentrifying neighborhoods, and the opposite. It takes, it unfolds slower. So it's a lot easier to identify. It's a lot easier to follow. It's a lot safer to get into for the average investor. And a lot of people know the properties in their neighborhood or in their area or in their general vicinity, right? They know what a deal is. Yes. They know what the values are, even if you're not a professional.
Yeah.
So there's going to be a lot of those types of opportunities for people that always want to get into real estate, to really buy at the right prices and get some generational assets. Because, the last dump we had like this was 08. That was 11, 12 years ago. So a lot of money made in the last 12 years on assets that were bought in 08. And, this will be another opportunity like that. And now I can't tell you exactly when it's going to bottom. I can just tell you that there's going to be a lot of opportunities. And as a result, we want people to just be positioned properly so they can capitalize on it.
Well, yeah, I mean, we're fairly busy with people starting credit repair. And a lot of people are seeing that there's going to be an opportunity in a couple of months. So a lot of people getting their credit fixed, for the sole purpose, because they know something's going to happen. This not going to last forever.
Well, the thing that I like, no, it's not. And I think the thing that I like more so about this time than I liked about, I didn't like anything about it. When the market collapsed in 08, I don't think anybody did. But this time, the thing that I like is that we're getting people that are emailing us like, listen, I want to, and obviously I know some of them are listening to some of these podcasts. So
yeah, a lot of them listening to the podcast.
Yeah, and I know they're listening and then they're coming to us after. But I just think if that's the case, and let's say we help 15 people, and those 15 people that listened and followed what we said, and they turn around and buy an asset for $200,000 that becomes an $800,000 asset because of inflation over the course of the next 10 to 15 years, just made somebody $600,000, right? The point I'm trying to make is that, just these kinds of things is what happens. Inflation is, when you're buying real estate, inflation is your best friend, because as the cost of goods go up, through inflation, the leading hedge to that is real estate, because as the cost of goods go up, the cost of property goes up. It runs with inflation. So, I mean, if you're naturally budgeting a certain degree of inflation over there and you own real estate, it's going to appreciate with everything else. So the point I'm trying to make is, I think for the average consumer that's not too crazy diversified, I think, preparing yourself and being on the lookout for opportunities, over the course of the next, look, your area, and I just think there's going to be a lot of opportunities that present themselves between now and the end of the year, for people to buy. And look, don't naturally assume because the overall economy hasn't adjusted that it's not a good time to buy. Okay, let's say in 6 months there's a house that's next door to you, or 5 doors down, or another block over, that was previously worth $400,000. Now they're selling it for $150,000, but the economy still hasn't rebounded entirely. That doesn't mean that's still not a good buy. $150,000, 30% marked down from the $400,000, right? So it's still a good buy. It's just, it's not going to be, by the time it gets rosy again in the economy and everybody's happy and everybody's high-fiving and the wealth effect kicks in again to the upside, it's going to be too late. It's going to be too late. You're going to have bought too late. So,
but Jay, I mean, is that just for homes, or is this for new construction loans? I mean, new construction homes. I got like 3 blocks away from my house. There's 3 homes that the builder built. Are those houses going to go down too?
Well, I mean, if they don't sell them, the lender's going to effectively take them back, because when you're building new construction, your cost is typically high. So, I mean, you're typically trying to price it somewhat competitively, and you're North Jersey too. So cost of doing everything is significantly higher there as opposed to other parts of the country, right?
Yeah.
So if it's somewhat of a lower price point, but not insane, but like a lower price point, chances are that their margins are thin, maybe 20%. So if they're selling it for $400,000, they're probably into it for $320,000. Right? Now, if that property goes from, let's just say for argument's sake, over the next 6 to 9 months, that property's no longer worth $400,000. Say worth $300,000. Well, then the builder goes back to the lender and says, "Look, this house is upside down," and then they start working something out because they can't sell it. The person's probably not paying it anymore. They may be, they may not. They may, a lot of times the investor loses motivation when the property goes upside down. But if they can rent it and break it out, that may work. But if all those things are off the table, then you'll see new construction get marked down, no question, man. Especially a smaller one like you're describing, like 3 houses or something, just a small little subset, and not like a Toll Brothers development, which could be largely problematic.
Yes.
Like a smaller town developer like that, seemingly, you could see a discount. But that I wouldn't. I think you're going to see things unfold with the real estate market that you're going to be like, wow, 6-8 months ago they were selling that for $400,000. Now they're asking this, right? Yeah. I'm just telling you, and everybody's going to think, it can get lower, it can get lower, it can get lower. There's going to be a floor. Like for instance, remember 3 weeks ago we did the podcast. The rates had the Fed had just dropped the rates to 0, right?
Yep.
And that day we got on, and it was like I said, the 30-year was at 3.25, I think.
Yes.
And I said that they were showing like a 7-year arm at 2.5, something like that, right?
Yes.
Now keep in mind, the Fed is still at 0, and I had explained to you then I don't think they're going to be able to drop much more because of the service. We talked about this last time. There's a servicing cost involved, and they got to make a certain amount of money against inflation, free, after tax, et cetera. The investors, the main investors like Fannie and Freddie.
Correct.
Same interest rates are low. Nothing has improved. The stock market's gotten worse. Guess what rates are now? Before I logged on, they were 30 years. I think it's 3.8. They're going up almost 70 basis points. So you're talking about, that's what I'm saying. Like, we're down near the floor. For all the people that were asking, and I was saying, like, I'm almost positive we're not going any lower because the lowest we could possibly go, I think I said last week, was like 2.9. And I don't even see that happening. And I think I said that last week. But we're already back up at 3.75, 3.
Wow.
Which is exactly where it was at 8 months ago before the dump. So it's like you say to yourself, these mortgage rates, you're on the floor. That's effectively telling you you are at the lending floor. You understand what I mean?
Yes.
When you have a market that's dropped 40%, and I know treasuries have stabilized, which have helped rates pop back up a little bit. But if you believe that treasuries are now stabilized and are going low, and the market continues to tank, then you know where your floor is right now in the mortgage rates. This is where you're sitting right now, and this is where it's going to be for the foreseeable future. So for anybody to think it's going to get lower, the day that it got down to when we were on, it was 3.25. I think the market was down 2,300 points that day, and the treasury was down to the 10-year treasury was down to like 0.4%. So we're probably not going to, now that the Fed has decided they're going to pump money into the system, and a lot of it, hundreds and hundreds and hundreds of billions buying treasuries, etc. We're not getting back down there.
Wow. So
as a result, this is the range you're going to be in. So expect that this is the range you're going to be in on mortgage rates.
You already know, guys. We do these podcasts every Monday. Educate you guys. Our existing customers log on, and a lot of new customers too. They want to learn this is an incentive that we do, because not a lot of credit repair people exactly know how to position you to get what you want out of your credit. Example, buying a house, buying a car, getting new credit cards, business loans. So we do these podcasts just to educate you guys for free and let you know who's helping you at the same time. Anything else you want to jab at, John?
No, I mean, I think we covered a pretty broad base here, but I just think that for anybody listening that's interested in the only thing I would implore, because I know a lot of people are kind of hanging on this SBA thing,
yes,
relative to the amount of attention that I've gotten specifically with clients reaching out, just make sure if you are going to submit it and you want to be taken seriously, make sure that you go to the extremes. Give them too much information. Give them more information than you need to give them. They'll throw out what they don't need. But if you want to be at the top of the line and you want to be at the front of the line and be one of the first ones to get approved, do not send them one page with chicken scratch on it and not any backup to explain it. If you're going to provide them a hardship explanation, detail the hardship. Provide financials. Show your tax returns from previous years. Show profit and loss through the first quarter of this year before it happened, and then a pro forma for the next quarter to show how you're being harmed. If you don't know what a pro forma is, look it up. If you don't know what a profit and loss is, look it up. They're all over the internet. Okay. Make sure that if you want to be taken seriously, that you come to the table seriously. Otherwise, you won't be taken seriously, and you're going to get lost in the mix. And I think that's the one thing that's not being explained to people. But the reality is that's the only way, if you're going to get one of these, that you're going to get it, and you're going to get it quick. Because I know a lot of people need quick capital, and I don't think they're going to get that quick capital from the banks right now for a multitude of reasons, because of the contraction I've talked about before, and because the government is just banking on people using these SBA loans, and I think that's the preferred vehicle right now. So I would just, it would behoove you to be very, very thorough about it. Otherwise, you're going to put yourself in a predicament, and you're going to wonder why. And I'm already telling you why. If you don't follow what I'm saying, that it's not going to work.
And again, the credit bureaus are still open. A lot of people don't understand, or probably feel like, when we talk about the credit bureaus, Equifax, Experian, TransUnion, that actually there's thousands of people that go and work there. But you were telling me the other day that it's more of a IT company than anything else.
Well, yeah, I mean, again, we talked about this in previous. I know I say it a lot. The Experian last year had a total. Experian's the biggest of three bureaus, $1 billion company. I think they netted almost $1 billion actually this year, but they only have 10,000 employees as of last year. That's it. 10,000 employees. There's 350 million people in this country. There's 10,000 employees. And we don't even know how many of them are full-time. The point I'm trying to make is 350 million people and only 10,000 employees. You do the math. It's all run algorithmically. Most of those 10,000 employees are either a large majority, because if you look at the skip up, you go back to 2015. And by the way, this is just an example, because Experian has the most employees than, I believe, Equifax and then TransUnion. And they both have less, I believe, if I remember correctly. So, and if you go back to 2015 to today, actually, there's been an increase in employees, which is probably more for the fraud department and the ones where they have to, because now they all have individual fraud departments. Correct. So that tick up has probably been more for that than anything else, because they are effectively IT companies. I mean, they're completely run by an algorithm. If you call their customer service, at least with Equifax, pretty much a large part of Experian is all outsourced to other countries. You're not getting like a consumer credit specialist on the phone when you call.
Correct.
Explain to me how that's anything other than an IT company, right? Most of the time when you talk to them, they don't even understand the laws behind it because they're not trained that way, because they don't want to be looked at that way. You know, so yes, to answer your question, it is largely an IT company, and I mean, they make boatloads of money, and they you know, unfortunately, there's just very little human interaction, with the exception of the fraud stuff that they beefed up in an effort to try and make sure that all fraud claims are legitimate, you know, and to avoid any of that stuff going forward. So it is what it is.
All righty, Jay. We got an hour, 22 minutes podcasting here. I got a lot of people on Facebook to ask questions and people on YouTube. Let me see if there's any more questions on YouTube. So will now near future be a good time to refi? So will now or near future be a good time to refi? Now is the time to refi.
Yeah, I understand. So we talked about this last one. So anybody that's just now listening to us for the first time, go back and listen to some of our podcasts. Go back like 5 or 6. We have at least 3 or 4 coronavirus ones, and we talk about a lot of this. But As far as the refi is concerned, if you have the equity, first of all, I would implore you to listen to the one from last week, because we talked specifically about is it time to refi or buy, or rates, etc. But if you are refinancing now and you have the equity in the property, it would be smart to do it now, because chances are values are going to drop over the course of the next, like I was talking about earlier. You're going to see values start to drop. And as a result, if you're tight on your loan to value, that could go from somebody being levered at 80% to somebody being levered at 90%, which inserts mortgage insurance. Anytime you go over 80%, it's going to add to your payment. It's going to make your refinance more costly. So I would say if you have the equity in the property, it's going to save you money if your rate is at least a point higher right now. So for instance, let's say the 30-year right now is approximately 3.75. If you're at like 4.75, 4.75, then, and you're not on the back end of your loan, meaning on the other side of the 15 years for a 30-year loan, then I would say, now would be the time, assuming all those boxes are checked. If you're somebody that's at a 4% rate and it's 3.75, and you're number one, that's not going to save you money anyway, and it's going to cost you on closing costs, because average closing costs on a refinance are 2 to 3% of the loan amount. So you're not going to make that difference back just dropping your rate a quarter. It's going to be a vanity play more than anything. It's not really going to save you money. But if it's a situation where you actually can drop the rate, you're actually going to save money, and you're not disrupting how far you've gotten. If you haven't gotten that far down on your repayment terms on the overall loan, if it's a 30-year, then now would be the time to lock in at the higher price, so that you can either avoid PMI, any mortgage insurance, or B, just make the deal less risky for the lender. The higher the value is, the lower the loan amount, the less risk it is for the lender, the less levered the loan is. But now would be the time, if you're going to lock in for the purposes of price. If you need that equity, you should lock it in, because values are going to start to drop. So they're already starting to drop, but they're going to drop more, like I've been saying the whole time.
Correct. All right, Sandy. So refi. Last week we talked about this refi. Should you refi or buy a home? And the answer was you should definitely refi, because I had people on my Facebook who are realtors and people who do mortgages that were like, I had this guy, I was saving him $300, and he's still waiting on the interest rates to get lower. Guess what? They just went up higher. He didn't get to save up the $300.
Yeah, so you'd want to wait to buy, just because rates aren't going to go up. I mean, they're in this range, and this range is where they're going to sit. You're sitting at the floor right now, and there's not going to be any economic catalyst that's going to force them to go up higher than this range anytime in the next 6 to 9 months, or probably anytime in the very near far future. But values are going to go down. So if you lock in now and buy a house right now, there's a strong possibility you'd be buying somewhere near the top. Because as I said earlier, the real estate market moves slower. It lags the stock market for a number of variables. So if you see the stock market dumping now, that aircraft carrier, otherwise called the real estate market, is slowly turning, and it's going to start moving in the other direction. And that directional value is going to be down, and you're going to start to see opportunities present themselves. So why buy at the top when you can wait a couple months at the same interest rate, 6, 7, 8, 9 months. Buy out of season, by the way, too. It's not the smartest thing to buy in season. Season, typically speaking, for real estate, the season is when values get jacked up, right? People buy from March to August, September. Then kids go back to school. You buy outside of season, which would put you October, November, December, when nobody's buying. If you got all your ducks in a row and you're ready to buy, that's even more of a discount. Look, just be patient, because the opportunities will present themselves. A house maybe you didn't think you were ever going to be able to buy, you folks love. Maybe if it's somewhere near your price range, there's a good possibility you can get down to there, and you could get an equity play long term on it, buying it on a pullback. You always want to buy on a pullback. This being a pullback, you don't want to be buying when it's on its best day. You want to be buying on a pullback, and we're walking, as far as real estate is concerned, you'll be walking into some really good pullback opportunities for real estate over the next 6 to 9 months. So I would, even if it's a primary residence,
okay,
it's going to open up a lot of opportunities.
Okay, you got it, guys. Again, we do these podcasts once a week, every Monday, 6 p.m. Make sure you hit the like button and the share button. That's a lot. You can definitely help us out by doing that. John, you got anything else you want to say?
No, I normally say this at the end, though, but if you know anybody that may not, as you know, we do these are just additional things we do for people. There's no catch here. A lot of this information we provide is just completely selfless information we're providing to people so that they can make the right decisions. There's not an angle here. If you decide to start any one of the services we offer, that's great. But in essence, there's no obligation. Although we'd like for you to, there's no obligation. So if you know other people that may need this kind of understanding, or if I've explained a lot of this stuff clear enough, you think that they could understand a lot of the stuff that I'm explaining over this podcast, a lot of the previous ones, you should definitely point them in that direction, because at the very least, if it's free information, and this is real information, this isn't an opinion I'm providing you guys if you haven't figured that out yet. So, this is stuff that is legitimate, and it's parts of the economy that, you should understand, and it's parts that will make things easier. Now, I think as a society, we're much smarter than we were in 2008. We should be. And I think the fact that there's a lot of people now coming to us and wanting to capitalize on the opportunity that's going to present itself soon, I think is good, but you need to know how to do it properly. And I think if you know anybody that this would help, and this or any of the other ones, send it over to them, or tell them about that we're doing it on Mondays. Definitely get the word out, because, the purpose is try to inform people and make people, knowledge is power. And if we can level the playing field, as far as just with a small portion of people in society, it's going to allow them the opportunity to, even one decision, somebody, like I was saying earlier, let's just say we talk to one person who ends up going and buying waits till the end of this year and finds a house that they love they were selling for $550 before, now it's marked down to $350. They're able to get it at $350 because they were patient. They got everything in line, and then in 10 years they sell that house for $950,000. They made, not only did they get their dream house, but they built $600,000 in equity over the course of time, right? Yeah. That they wouldn't otherwise have probably purchased at the right time. So it's small things like that can grow into something much larger. So if you know anybody, definitely have them, point them over as far as at least the podcasts are concerned.
Correct. All right, John. Just want to say thank you, man. Always.
All right, you got it.
Okay. See you later.
Bye.
Bye-bye. So yeah, my people, as you know, I got some people here text messaging me and emailing me today. You already know. This is what we do. Thank you so much for logging on. Facebook and Facebook, I can't see my comments. So if you wrote a comment the last 20 minutes, I haven't been able to see it. I'm sorry about that. But the YouTube is always on fire. Thank you so much for everybody. Thank you, Sandy, Reggie, Curtis. All right. What is this? Breon. Let me see. Christopher. Everybody on here. So I just want to say thank you to all of you for participating in today's podcast. Of course, you got to do something, because we are getting more busy as we speak with credit repairs. A lot of people coming, and couples in California, Arizona. This is the time for me to fix my credit. I'm home. I'm not doing anything, and I have some income set aside. This is the perfect time. This is not going to last forever. And a lot of you, don't be afraid. Like John said, you got to see and be rational and see how you're going to be in the next month to 2 months during this coronavirus stuff that's going on right now. So don't be scared, And, contact me. You already know, 973-440-8661. Or just email me at GizzyCredit@GizzyCredit.com. Again, so I'll see you guys later. And, peace. Peace out. Oh. GizzyCredit. Anything you want, then you can get it. Don't be scared, then you'll regret it. You no longer gotta look pathetic. Look pathetic. Gizzy. Don't get scammed. What you need is just to change your plans. People. Time is money, you know, get that cash. Just get it fast. Gizzy. See you later, YouTube. Thank you so much for the likes. Peace out. See you next time.